Hello fellow humans, the Trade Vigilante here for another weekly strategy market analysis before the opening. Now it's Sunday, we're getting ready for the next week of trading. And the usual things I'm looking at is oil. Once again, we have these negotiations between the United States and Iran happening right now, which have sent the oil already lower from what it was a few weeks ago, even 1 week ago. So from 92 we are down now to 77, and on the hopes of a deal. Now, just a personal opinion, I don't think this is gonna last, the deal, or it will be somehow broken. So I could see potentially being bullish on Brent oil, especially Brent oil, because it's the one that is affected the most by the Strait of Hormuz. So I could potentially see that if the price goes a bit lower. Now we are in this range of basically it's a little elevated but not so elevated where you can go short or long. It's like right in the middle, in my opinion, in the range that I like to go long or short with. So it's a bit of a wait and see mode, but overall I think this crisis is far from over. Now once again we're looking at crypto, which has been going up in the past week. Specifically, what we saw was the weaker job data, weaker than expected, and so the market has started pricing out the possibility of a rate hike from the US Central Bank, which was rattling a little bit the market in the days before the job report. So that has changed. The sentiment has flipped bullish again, inflationary again, but we are yet to see what is going to happen in the next few reports, like the CPI, Consumer Price Index, and general inflation reports, of course, and the Iran war that has an effect on the rest. Now, on this bounce, even Tesla has followed the market, celebrating, between quotes, lower expected rates for the end of the year. So we have Tesla going up, we have SpaceX that had a gigantic bounce, about 20% in one day. And as I've said before, I am not bullish on SpaceX at the moment, at least until we get to some kind of bottom in the general market, because of all the unlocks that we have for SpaceX until December. So there could potentially be more selling pressure. What has also followed this bounce in the last few days is silver and gold, of course. So you can see all these things are moving almost at the same time, and they're not uncorrelated. They are bouncing because of these lower hope for lower interest rates in the future. Now, cocoa is not quite like that, although it has somewhat followed. But again, I'm watching it possibly to trade around it a little bit, depending on where we are in the range. And the S&P, again, of course, the S&P has probably followed those expectations of lower rates as well. So far, market is going up. It's actually going very, very well, pushing up, and that's fine. Now, the thing that I am most worried about this particular week is the whole thing around the Japanese yen. Now, some people are predicting some kind of new Asian bond crisis type of scenario, which is not so unlikely, considering we can see in the past 10 years, especially since COVID, the Japanese yen has lost a huge amount of purchasing power against the US dollar, and that is causing real concerns because, for many reasons. One of them being, of course, the higher costs for Japanese businesses when importing goods. So we are now 50% lower than only 5 years ago. About 5 years ago. So the yen has lost 50% of its value in 5 years, which means the businesses are paying 50% more to get the same goods from abroad, from the United States specifically. This is causing a problem. It's raising inflation in Japan, which is actually something the Japanese central bank might want in a certain way, or the government might want, because it's the only way for them to somehow spur growth and market development in a way, if we can say that. Unfortunately, this is how it works. The reason Japan has had very low rates for many years is because they want some kind of push. They want to stimulate the economy, which has been fairly stagnant because of lower demographic, no immigration, all these kind of things. So yeah, it's a complex situation that I want to monitor very closely, because it could potentially cause a crisis again. Now, a few days ago, the United States did announce an intervention where they would buy several $1 billion worth of yen just to support the yen itself. That's because if they didn't, then the Japanese government would potentially have to look at starting to sell United States bonds and treasuries, potentially causing the US dollar to go lower and to suffer. So to avoid that, the US government has bought a few $1 billion worth of Japanese yen. As you can see, this big drop from 163 yen to 105.56 yen per dollar. But does that solve the problem? In my opinion, it does not solve the problem, and there is no easy way out of here. So this, what I'm looking at very closely. Potentially, the only way out would be to have higher inflation, which is the only way to go forward, considering the gigantic national debt that Japan has, and that, well, these days most Western countries do have, like Italy, like Greece, like France, like the United States themselves. So I'm not sure, but yeah, monitoring the situation closely. And the last point about this I want to make is that, of course, there is the whole carry trade thing. So if the yen, if the Japanese central bank has to raise rates, then borrowing the yen to buy American assets, which is something that has been happening for years now, which is also one of the causes for this depreciation of the yen, then that could potentially cause a market crash in the US. So this is why the United States have rushed to support the yen, and South Korea is talking to do the same in some other ways for the moment. But yeah, these are the things that I am concerned of this week specifically, and yeah, we will keep monitoring and based on that we make our trade decisions. And yeah, I hope you found this video informative, and this is not financial advice, it's just again, an informative video. Thank you for watching.